As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're pleased to have a returning guest today. Jerry Robinson, founder and host of FollowTheMoney.com, is here with us again on Reluctant Preppers. Jerry is an economist. He is a commentator on the financial situation and political situation and moral situation in the world. He's also gives people guidance on a multi-step plans to achieve financial independence. He is the author of Bankruptcy of Our Nation. Jerry, thank you once again for joining us here on Reluctant Preppers.
Oh, it's a great honor. Thank you very much. Appreciate it.
Keying off the title of your site and a lot of your work about following the money, people have been holding their breath with great hope after electing Donald Trump against all odds and against all predictions, who promised during his election campaign that he was going to go into Washington and drain the swamp. So after half a year of Trump presidency, where are we seeing the money flowing? And have we seen any significant trends or changes that are signs of the times, in your view, of money flow changing as you follow the money since Trump took office and is draining the swamp?
That's a really good question. I mean, the money is flowing. Of course, it's always flowing. And you know what money flows to? It always flows to the rate of highest return. If you want to know, it's an economic law. So money is always drifting gently in the direction that offers the highest return. So, now in this world that's upside down, where we have zero interest rates, that's kind of that really hasn't changed, but there has been a safety mechanism. People have been turning to bonds and seeking some sort of return, and that's of course led to this big bond bubble that former Fed Chairman Alan Greenspan has now warned about, this huge bond bubble that we've all been very aware of that just continues to loom over us. But when you take a look at actually the money flows, what we see from our own research is we see money, of course, flowing into equities. Now, remember, and cryptocurrencies and a few other areas. But let me start with equities, because with equities, what's very bizarre about equities is the fact that they have been going up since 2009, almost without fail. And so back in 2008, whenever the market crashed, many people were, turned off to equities. They sought refuge in some other kind of asset. Many turned to gold and silver, many turned to real estate, or many turned just to put it in their mattress. But during that time, over the course of the 8 years that Obama was in office, we saw the stock market rise 175%, and we saw relative calm. Now, with President Trump in office, he's been in office for 6 months, and we've seen the stock market go up another approximately 20% since he's been in office. So it's continuing the trajectory. But remember, there was a tremendous amount of money that was on the sidelines during the Obama administration, primarily people who were trading and investing based upon their politics. Believe it or not, people do that. And what they did was they feared that Obama himself would cause some sort of economic crash. It was on Fox News all the time. The constant thing that you heard is that Obama is a bumbling idiot. He can't do anything at all. He's going to crash our economy. He'll never leave the White House. All of these kinds of absurd things. But for 60-year-old ladies holding on to money, they actually listen to that. And so they stayed on the sidelines as money was made, 175% as stocks rose during that time. But now, we are starting to see that the GOP voters who had previously been holding tightly to their money or keeping it in the mattress are now beginning to say, maybe things are better now. Maybe everything isn't going to be destroyed because now Trump is in office. And so suddenly the math is working differently in the head, and we're starting to see this actually in quarterly earnings reports. If you look, for example, at Charles Schwab or E-Trade, some of these big online brokerages, what you'll discover is that they are seeing some of the largest new customer account numbers that they have seen since the dot-com bubble. Schwab in particular is noting and even telling its clients that there is a tremendous amount of new volume coming into the market that did not previously exist. That's exactly what we've seen. And in fact, talking about following the money, typically in the summer months, equities go through this summer lull.
Doldrums, yeah. Mm-hmm.
Doldrums, yeah. They just don't tend to do very well. And you don't tend to see a lot of volume. But we've seen a lot of volume, relatively speaking, to previous. And we're also seeing that money flow not just into equities, but especially into ETFs in particular, and also into some commodities, some select commodities. We've seen, for example, rare earth metals, which we've been, profiting on that big run. We've also seen lithium, which we've been pounding the table on for quite a long time. There's a few key select commodities. Then there's cryptocurrencies. People are moving to cryptocurrencies. Many people who have a belief that the U.S. dollar is in shambles, that it cannot survive, that it is unsustainable, have turned, instead of to gold and silver, to Bitcoin, or to token card, or to Bitcoin Cash now, or Ether. Many of these cryptocurrencies have really become all the rage. And interestingly enough, if you notice that the U.S. dollar has dropped dramatically over the last 6 months. Underneath Trump, it has dropped. The U.S. dollar has dropped 7%. There's never been a president who we've seen that kind of dollar drop in 6 months. This is pretty much unprecedented. And during that same time, where did the money go? Well, typically you'll see gold and silver pop whenever the dollar sells off like that. They're inverse yin-yang. But that's not what happened. Instead, what we saw was a lot of money flowing not into gold and silver as normal, but instead into cryptos. So we started seeing a lot of money flowing into crypto. So, for example, Ripple, which is one of the cryptocurrencies that's out there that we've owned that one for, I guess, since 2012. XRP, it's up 4,000% this year. Ether is also up, thousands of percent this year. So money is flowing into these speculative areas like this. We see new customer accounts opening up for equities across the board. So I think to summarize, the answer is to simply say that stocks and cryptocurrencies are the two places that we see a tremendous amount of money flowing into. Also real estate. But remember, real estate is it's predominantly, right now, rental real estate has never been in more demand. There has never been a higher demand for rental real estate in the United States, according to CoreLogic and a few other research outfits. But most of the sales are coming from cash buyers, meaning that we're talking about big money Wall Street firms coming in and buying up investment homes and then packaging them and selling them within the context of a REIT, like a real estate investment trust or something. And so, we're certainly seeing that, but not so much at the individual level. It's more of a corporate thing. But as far as individuals, retail investors, it's cryptocurrencies and equities is what we see right now.
And on that topic of cryptocurrencies, you have a multi-step plan for people to achieve financial security and financial independence. And other than the speculative nature that you mentioned, do cryptocurrencies play any part in your recommended multi-step financial plan for families?
Well, they do. It is a speculative. So we have 5 levels to financial freedom. You go to our website, ftmdaily.com/5 levels, and you can download them there or see them there. And in level 5, after you have laid the foundation and done all the other things, with your speculative money, yes. And the way we do it, we currently own 9 cryptocurrencies. I was an early adopter. I was in 2011, but when we take a look at cryptocurrencies as a whole, we don't put them all in one basket, just like stocks. So we keep it broadly diversified. So we have Litecoin. We have, I mentioned Token Card. We have Bitcoin, and we also have the new Bitcoin Cash, which just came available yesterday. You can buy that through an outfit called Bittrex, or there's a few other places you can buy it online. So, so we're exposed to those areas. But when you take a look at the actual amount we have there, it's 5% of our total investable assets we have exposed to cryptocurrencies, and no more. but we are always rebalancing to make sure we have 5% exposure. And that 5% exposure has provided an outsized return for our overall portfolio. And for that reason, I think people who are looking to speculate, maybe they're looking at penny stocks, or maybe they're looking at, some other kind of strategy. Well, maybe they should consider cryptocurrencies or throw that into the mix for their speculative capital, not their rent money, but their speculative capital that they can afford to lose, because the future bodes well, I believe, for the blockchain technology.
Turning back to Alan Greenspan's comment that came out yesterday about the debt is in a bubble and the market is not recognizing this. For people who have put a lot of their savings and a lot of their earnings in their primary dwelling or their real estate, is this a prime time for them to consider selling their home if they want to downsize and cash out of the real estate bubble?
Well, I guess it all depends where they are. I mean, there was a report put out the other day that showed that there were several different markets that were highly overvalued. One of them was Denver. Another one that I recall seeing was, I believe it was the DC metro area. But there are several areas out there where we are seeing bubble-like kind of markets. Houston was another, which I was very surprised. Used to live there. The housing down there relative to everywhere else is fairly cheap, which shows you that there is some danger here in such a market like Houston when we start seeing a bubble. But no, I mean, I don't think I would be running out and selling my house right now in this environment, because rates are going to go up, right, over time. And in fact, that was the primary takeaway from Alan Greenspan's comments, was simply that we're going to have higher interest rates. I mean, can you imagine, Dunnigan, can you imagine if interest rates went back to where they were in the 1980s? I mean, you have corporate debt at all-time highs. You have student loans at all-time highs. You have credit card debt at all-time highs. You have mortgage debt at all-time highs.
And municipal and state and sovereign debt.
And municipal, you just go down the list, and you fast forward the tape 10 years, and you have those inevitable rate increases, which have to happen, of course, and they rise. And this is where the rubber meets the road, is that we have borrowed to the hilt. It's going to be painful whenever we have to deleverage this again. We have, the banks are bigger now than they were before. Remember when they were too big to fail? Now they're even bigger. I mean, all of this is just a big, big nightmare that is just continuing to pile up. We have been making money prior to the crash and since the crash. And what we do is we follow the money. So before the crash in 2007, whenever I was speaking, wherever I was going, or on the podcast, or whatever I was doing, I was saying the market is going to crash. After the market crashes in 2008, we began to see a new uptrend forming. And then when the Fed said, hey, we're going to goose the market, we thought this is a no-brainer. And so from 2009, with one or two exceptions, in 2011, we had a little scare. We got out of the market briefly. And then also in 2015, there was another scare. And it didn't fully take us out of the market, but we got out a lot of our major long-term holding positions. And we switched now to, since 2015, we've been in a very much of a speculative trading environment. So we are stock pickers in this environment. And that's been a way to go so far. But interest rates, no doubt, have to go up, right? They have to go up. So I think that individuals out there be thinking about that. If you have affordable housing to offer, you're going to be in a great place. So that's why I like physical real estate. I like affordable housing. So a good 3-bedroom, 2-bathroom house in a good working neighborhood, hardworking neighborhood. Are you kidding? When interest rates go up and nobody can afford to buy that house, I'm going to be renting it, and I'm going to be continuing to rent it. And I think that's a very powerful thing. So if rates go up, then lock in cheap real estate at low rates before it goes up, and have that affordable housing that people can, call you on the phone and rent your house. But it all depends where you're at. Now, if you're in, if you're living in, Hawaii, then maybe that's not a smart idea because you may not find much affordable housing. But if you're living in Duluth, Minnesota, right, or if you're living in Kansas, or you're living in Arkansas or Oklahoma or Texas, there's several different states where it makes sense. Not everywhere, but there's a lot of places where it makes sense.
If we could shift our attention to more the future facing and the topic of the rise of the machines, we have seen for decades now an march of businesses, both manufacturing and even service offshores, to first of all to offshoring to other countries where they may have lower labor costs, they may have more favorable tax structure, they may have relaxed ecological restrictions and regulations, and but now the trend is, even for those jobs that were left here, or in some of those that were offshored, to be converting those to robotics, to artificial intelligence, and it keeps pushing farther and farther into more and more sectors of the economy and eliminating entire classes of jobs. Even one of the hottest job topics of this year, which is the data scientist, who is supposed to be one of those people being a mover and shaker. It's one of the hottest new degrees you can get from grad school, and basically name your price when you're looking for a job in that area, is in some ways being outmoded by self-service, artificially intelligent applications that will allow savvy business owners or users to basically do their own deep analytics and that sort of thing, and just drag and drop and get their answers in hours, where it would have taken a whole team of people, including expensive data scientists and other consultants, to do that last year. So there's other examples of that, but we had our guest on recently, Ann Barnhart, talking about "You Are Now Obsolete." Can you talk to us about what you're seeing in your research about the rise of machines?
Well, there's a great book on this topic by Jacques Ellul. He was a French sociologist, and he wrote a book called The Technological Society. A fantastic book, very prophetic in its writing. It's a tough book to go through. It deals with a lot of history. It's very academic, but some key takeaways. What Ellul points out in his book, and this book was published back in the 50s or maybe the 60s, I forget now. But what he points out is that technique is one of the most important things in mankind. Technique, how we do things. So whether you are out planting seeds, right? You're planting seeds, or you are, making food, or you are making clothing, whatever you're doing. Let's say you're living 5,000 years ago. The technique that you're using is important. And over time, technique was fairly stable, because people's determinations were different. People's determinations have changed in recent time, primarily due to political philosophies that have been foisted upon us. So we have things like all of the isms, right? We have the capitalism. What's the purpose of capitalism? Well, what is the purpose of it? Well, it's to make more money. It's to make more money for everybody. So what do we do to technique whenever capitalism comes along? Technique becomes a slave. Technique becomes the thing that we do in order to maximize profit, not to maximize human life, not to maximize human dignity, not to maximize human thought, not to maximize the spiritual nature, not to maximize anything necessarily good, but simply to maximize profit. And that becomes the absolute bottom line for every bit of the technique that we develop. So now technique of old is now growing into technology. So now we have a technological society, or a technological state, that is growing around us. This technique now has been harnessed with the abilities of capitalism to now basically bring efficiency. Efficiency is the most important thing. Really, it really is. If people die in overseas third world factories, we don't bat an eyelid here in the West, because we care for the technique so much that it may require a few people to die in poverty. Technique is prized above all things today. Technology. We worship technology. We love technology. We call all technology good. by all definitions, it doesn't matter what it is, if it's technology, we assume that it's good. This is a moral failing, I believe, in humanity that will come back and bite us. It already has. It's already bitten much of the world. Here in the West, we have been insulated from the dastardly effects of worshiping technology. But now, as we look around, we see that we have machines. Imagine bringing somebody from the 1500s to 2017, letting him walk around. What he would notice? He would notice how many machines the average person has. The machine, in many ways, did not change. The machine changed the world more perhaps than even capitalism did. The machine, the god-awful power of the machine, it controls us. We are moved by the machine. We look at machines all day. We have a machine in our pocket. We have a machine on our wrist. We have a machine everywhere we turn. Our refrigerator is man cannot live without his machines. And these machines must be efficient. And over time, the machines become smart. They become capable of being able to reason, right? As man. Man wants to recreate himself. He's always wanted to. Now his dream is coming true. So the propaganda that we constantly hear about how great things will be 30 or 40 years from now negates the fact that we have really done a lot of bad things to humanity as a result of our technique and our rise of our technological society. I think as we go forward, what we see is machines being implanted into your body. Why? Why would you need a machine in your body? Well, you're not efficient without a machine in your body. It makes you more efficient. And remember, efficiency, not human pride, not human integrity, not human dignity, not what you think, not what really care, not about anything else. It has to do with efficiency. And if efficiency can be improved, then the technological society is satisfied and we move one step further away from a human society and more towards a technological society. I think in the future we're going to see machines implanted into our brains to make us smarter so that we can be more efficient, so that we can keep up with the technological society that's being created around us. Because God forbid, we're not all efficient in this technological age. So I'm a pessimist on, if you can't tell, on the technological society. I don't think that it's good. I don't call technology good. I don't think that it automatically defaults to being a good thing. I think that it's amoral, and that in many ways we're using it to squander humanity in a terrible way.
Jerry, if people want to follow up more beyond reading the book, The Technological Society by Jacques Ellul, 1954, I looked it up while we were talking. Is there any more current readings on this topic or any particular channels where you think that they can come up to date on what you're talking about in your latest research?
We did a really important teaching not too long ago on propaganda, and you had us on to talk about that teaching. I think that teaching, they can go to ftmdaily.com/propaganda. The propaganda base is where all of this begins. So the foundation has to be laid properly for people to be able to accept this. And we talk about that and how the propaganda is not necessarily just the stuff that you see on the news channels or what you think that it is, but it's something very, very different. We get into that at ftmdaily.com/propaganda. And if folks want to find us online, that's where they can go, ftmdaily.com. Followthemoney.com will get you there as well. We have memberships. People can sign up and get our trends and our weekend briefing, our PDFs that we put out, all of our videos. We do a ton of stuff for our members. And if they want to learn and they want to coach to learn how to do all of this, we're here to help.
Well, Jerry Robinson, founder and host of Follow the Money Daily, ftmdaily.com. Thanks so much for joining us again here on Reluctant Preppers. We always appreciate you giving us your perspective from some great success that you continue to have in navigating the swamp and the flows of where the money is flowing. And thanks again for being here with us on Reluctant Preppers.
God bless you, brother. It's a great time to be here. Thank you.